Hey everyone, and welcome back to Talk Tickers.
It's good to be back.
Today we're diving into Western Digital's Q2 2025 earnings call.
Really fascinating stuff.
The data centers,
AI.
and, of course, a whole lot of storage.
Yeah, we're going to break down what actually matters from this call so you don't have to.
Exactly.
You know, it's a very interesting time for Western Digital.
It is.
Especially with their upcoming split into two separate companies.
Right.
One focused on hard disk drives, or HDDs,
HDD.
and the other on flash memory. It's almost like they're betting on both the Tortoise and the Hare in this data storage race.
Oh, that's a great analogy. I like that.
You know.
So before we get into the Hare and the Tortoise,
Yeah.
what's the big picture here?
Right.
Did Western Digital hit their numbers this quarter?
Well, they actually exceeded revenue expectations,
Oh, wow.
pulling in $4.3 billion.
Okay.
That's a 5% jump from the previous quarter.
Not bad.
However,
Uh-oh.
their gross margins came in a bit lower than predicted, mainly because of pressure on flash pricing.
Makes sense.
But even with that, their non-GAAP earnings per share landed at a respectable $1.77 back-ends.
Interesting. So it sounds like a bit of a mixed bag then.
Yeah.
Revenue is up, but margins are down.
Yeah.
What's the story behind that?
Well, it really comes down to the two sides of their business.
Okay.
On the one hand, their HDD business is booming, largely thanks to the insatiable demand from data centers.
Yeah, right.
We're talking record demand that's actually outpacing supply,
Really?
which has driven their HDD revenue to a 12-quarter high with a record non-GAAP gross margin.
Wow, that's impressive.
It is.
So it sounds like the old spinning disks are still holding their own against the newer flash technology.
You know...
What's driving that strong demand for HDDs?
Well, it all boils down to the sheer volume of data being generated these days.
Yeah?
Everything from video streaming to scientific research to, yes, artificial intelligence is creating a massive need for storage.
Right.
And while flash memory is great for speed, HDDs offer a much more cost-effective solution when you need to store truly massive amounts of data.
That makes sense.
Yeah.
So it's like flash is the sports car for quick access.
Right.
While HDDs are the heavy-duty trucks hauling mountains of data.
Exactly. And Western Digital's innovative ultra-SMR technology is allowing them to pack even more data onto those HDDs.
Really?
Think of it like squeezing more passengers into those heavy-duty trucks without sacrificing reliability.
Clever.
Yeah.
Okay, so HDDs are having a moment.
They are.
But what about the flash side of their business?
Right.
You mentioned some pricing pressure.
Right. The flash market is in what they're calling a mid-cycle pause.
Mid-cycle pause.
Basically, there's a bit of an oversupply situation happening right now.
Okay.
Which puts downward pressure on prices and profitability.
Too much supply,
Yeah.
not enough demand, prices take a hit.
Right.
Classic economics.
Exactly.
But with all the hype around AI and its reliance on flash memory, why is there an oversupply?
Well, it's more nuanced than just AI demand. Okay.
Well, it's true that AI is driving a lot of growth in the flash market,
Yeah?
especially in the cloud. There are other factors at play.
Okay.
We're seeing some softening demand in areas like PC and mobile, which is contributing to the oversupply.
So it's not a simple story?
It's not.
Flash is facing headwinds.
Right.
But there are still pockets of strength,
Right.
particularly in the cloud.
Exactly. And it's important to note that Western Digital is not just standing still.
Oh, of course not.
They're taking proactive steps to manage the situation.
Okay.
They're adjusting their production levels to better match the current demand and focusing on their higher-end products, which command better pricing.
Smart move.
Yeah.
So even though the flash market is a bit turbulent right now,
Right.
Western Digital seems to be navigating it carefully.
They are.
But this all makes their upcoming split even more intriguing, right?
Absolutely.
Yeah.
The investor days they have planned for February will be very telling.
I think so. It'll be fascinating to see how each separate company, SanDisk for flash and Western Digital for HDDs, plans to tackle the challenges and opportunities ahead.
Right.
We'll have more on that in part 2 of this deep dive.
Can't wait. Now, let's not forget that before they split,
Right?
they're still operating as a single company.
They are.
So how did their various market segments perform this quarter?
Well, cloud revenue was the standout performer, making up a whopping 55% of their total revenue at $2.3 billion.
Right.
That's a 6% jump from the previous quarter and more than double what they brought in a year ago.
Wow, the cloud is clearly where it's at for them.
It is.
What about their other segments?
Well, their client revenue, which accounts for 27% of their total, dipped slightly to $1.2 billion.
Okay.
That's down 3% from last quarter. That's still 4% higher than last year. Finally, the consumer segment contributed 18% of revenue at $800 million, up a healthy 14% from last quarter, but down 8% year over year.
So a mixed bag across the board. But with cloud as the undeniable star, given the pressure on flash pricing, what's the overall picture for their gross margins?
Their overall gross margins landed at 35.9%. Which, as we mentioned earlier, fell short of predictions. A large part of that is due to the pressure on flash pricing. Their flash gross margin took a hit, dropping 6.4 percentage points from last quarter to 32.5%.
Ouch. That's a significant drop.
It is.
But thankfully, their HDD business is doing well, right?
Absolutely. HDD gross margin actually inched up 0.5 percentage point from last quarter to a record 38.6%.
Really?
That's almost 14 percentage points higher than a year ago.
It's amazing how these two businesses are experiencing such different realities right now.
Yeah.
One's riding a wave while the other's battling some serious headwinds. That's what makes this split so interesting.
It really does.
It'll be fascinating to see how each company performs once they're free to focus on their individual strengths.
Exactly.
But for now, they're still operating as one, and it seems they're managing their finances quite well.
They are.
Their operating expenses were actually lower than expected. Mainly due to lower synergy costs and variable compensation. Sounds like they're being very fiscally responsible. Especially with the split on the horizon.
Yes.
Now let's talk about what everyone really cares about.
It's okay.
Earnings. What did all this translate to in terms of earnings per share?
They reported non-GAAP earnings per share of $1.77.5 for the quarter.
Not bad at all.
No.
Considering those flash headwinds we discussed. Definitely respectable.
It is.
Now, before we move on to their cash flow and guidance for the next quarter, I'm curious about one thing. We talked about flash being in a mid-cycle pause. But we didn't really define what that means.
Good points.
A mid-cycle pause in the flash market basically refers to a period of slower growth and pricing pressure after a period of strong demand. It's not uncommon in this industry.
And it's typically driven by factors like inventory adjustments and shifts in supply and demand.
So it's not necessarily a sign of long-term trouble.
No.
More like a temporary slowdown.
Exactly. And it's important to remember that Western Digital is taking steps to navigate this pause and position themselves for future growth. They're adjusting their production levels, focusing on higher value products, and of course, preparing for the split.
Makes sense. All right, now let's dive into their cash flow for the quarter. How do they do on that front?
Their operating cash flow came in at $403 million. With free cash flow at $335 million. They also managed to keep their inventory levels steady at $3.4 billion.
So they're keeping the cash flowing and the inventory under control.
They are.
Sounds like a well-managed operation.
He does.
What about their debt situation? Any updates there?
Their gross debt stood at $7.4 billion at the end of the quarter. But they also had a healthy cash and cash equivalents balance of $2.3 billion. Add in their undrawn revolver capacity, and their total liquidity sits at a comfortable $4.5 billion. All
right, so they have some breathing room there.
They do.
Now let's get to the part that everyone's really waiting for. Their guidance for the next quarter. What are they expecting?
Well, they're projecting total revenue to be between $3.75 billion and $3.95 billion. That's slightly lower than this quarter, but not entirely unexpected given the current market dynamics.
A slight dip, but hey, they've got to manage expectations.
Exactly.
What about their gross margins? Are they expecting any further pressure there?
Unfortunately, they are. They're forecasting their gross margins to fall to a range of 31.5% to 33.5%.
Okay, so that's something to keep an eye on.
It is.
What's driving that projected decline?
Well, the continued pressure on flash pricing is a major factor, along with higher costs per bit. And some underutilization charges as they adjust their production levels.
Underutilization charges. That sounds like it's going to cost them a bit.
It is.
How much are we talking?
They're estimating these charges to be between $20 million and $30 million for the next quarter.
Not insignificant.
No.
But it sounds like they're taking the necessary steps to address the oversupply situation in flash.
They are.
What about their operating expenses?
Any
changes expected there?
Actually, they're forecasting a slight increase in operating expenses.
Really?
To a range of $700 million to $720 million. This includes those dyssynergy costs we mentioned earlier,
Right.
which they estimate will be between $25 million and $40 million as they finalize the separation.
Splitting up is never easy or cheap.
It's not.
But hopefully it'll pay off in the long run.
Yeah.
Now let's get to the bottom line.
Okay.
What's their earnings per share guidance for the next quarter?
They're expecting non-GAAP earnings per share to fall between 0 to 90 cents and $1.20.
So another dip there as well.
It is.
But we've got to remember that they're going through a major transition.
Right.
Now let's get a little more granular.
Yeah.
What are their individual outlooks for the flash and HDD businesses in the next quarter?
Okay. Well, for flash, they're anticipating a sequential revenue decline in the mid-teens % range.
Okay.
This is primarily driven by lower average selling prices,
right,
higher costs per bit, and those underutilization charges we talked about.
Right, so a bit of a rough patch for flash in the near term.
It is.
What about bit shipments?
Okay.
What are they projecting there?
They're expecting flash bit shipments to decrease sequentially by a mid-single-digit %.
Okay.
They also anticipate those underutilization charges to continue into the June quarter.
Okay, so they're battening down the hatches on the flash side?
Yeah.
Now, what about HDDs?
Right.
Are they expecting their winning streak to continue?
Well, while they are anticipating a sequential revenue decrease in the mid to high single-digit % range, this is mostly due to lower volume, not a decline in demand.
So they're still selling like hotcakes, just maybe not quite as many as this quarter.
Right.
What about profitability?
Right.
Any good news there?
They're actually projecting that HDD gross margin will improve by about 50 basis points.
Okay.
As the average price per unit continues to climb.
No, that's what I like to hear.
Yeah.
Seems like the HDD business is still firing on all cylinders.
It does.
Despite that slight dip in volume.
Yeah.
Now, before we move on to our This Is Not Financial Advices segment.
Okay.
Any final thoughts on Western Digital's overall performance and outlook?
I think the key takeaway here is that they're navigating some choppy waters right now.
Yeah.
With the flash market and a bit of a lull and the upcoming separation adding another layer of complexity.
Right.
However, they seem to be managing things well.
Okay.
With strong performance in the HDD business offsetting some of the weakness in flash, their focus on operational efficiency and cost discipline is also encouraging.
Yeah.
Especially as they prepare to become two separate entities.
Well said. They're definitely facing some challenges.
Right.
But they also have a lot of positives working in their favor.
Yeah.
Now let's shift gears and have some fun with our This Is Not Financial Advices segment.
Okay.
Are you ready to cook up a crazy but plausible trade idea?
Always game for a little market speculation.
All right, here's a thought.
Okay.
Given the contrasting fortunes of their HDD and flash businesses and the impending split,
right?
How about shorting SanDisk and going along on Western Digital?
Now, that's an interesting proposition.
Yeah.
Walk me through your logic.
Well, my thinking is that Western Digital, with its booming HDD business, might be temporarily undervalued.
Okay.
Compared to SanDisk, which is facing those headwinds in the flash market.
Right.
As the market adjusts to the separation.
Yeah.
And investors start to appreciate the long-term potential of both businesses. This could be a lucrative, albeit risky play.
I see where you're going with this. There's definitely an argument to be made that the market hasn't fully priced in the potential of the separated entities.
Right.
However, it's crucial to remember that shorting any stock carries significant risks.
Oh, absolutely.
And this is purely hypothetical, of course.
Of course. This is all in good fun.
Yeah.
And definitely not financial advice.
Right.
We're just exploring some possibilities based on what we've learned today.
Yeah.
But it'll be fascinating to see how things play out for both Western Digital and SanDisk once they're flying solo.
Absolutely.
Yeah.
The upcoming investor days should provide some valuable insights into their individual strategies and growth prospects.
Right.
It'll be interesting to see how they each plan to capitalize on the opportunities and navigate the challenges ahead.
Absolutely.
Stay tuned for part 2 of our deep dive where we'll dissect those investor day presentations.
Can't wait.
All right, welcome back to Talk Tickers. We're continuing our deep dive into Western Digital's Q2 2025 earnings call. Last time we set the stage with a broad overview of their performance. Now let's zoom in on those individual business segments, starting with flash memory.
Okay, so flash.
Yeah.
It's the technology everyone's talking about, especially with AI exploding onto the scene. But as we discussed, the flash market is going through a mid-cycle pause, which sounds a bit like a euphemism for things aren't great. What's the reality on the ground for Western Digital's flash business?
Well, it's a complex picture. On the one hand, they did see a 9% sequential increase in bit shipments this quarter.
Okay.
That's a positive sign.
Right.
However, as we discussed, pricing pressure is eating into their margins.
Right. Too much supply, not enough demand, prices take a hit, basic economics.
Mm-hmm.
But we also heard that cloud demand for flash is still strong.
Right.
So it's not all doom and gloom, right?
Exactly. It's not a uniform downturn across the board. We're actually seeing some strength in client and consumer segments this quarter, which helped drive those better than expected bit shipments. However, pricing pressure, especially toward the end of the quarter, did offset some of those gains.
So some bright spots, but overall a bit of a squeeze.
Yeah. And looking ahead, they actually expect bit shipments to decline in the next quarter.
Okay, now that sounds a bit more concerning. What's driving that projected decline?
Well, it's a combination of factors. They're anticipating weaker demand in the PC and consumer markets,
Okay.
which they expect will outweigh stronger demand in data center and mobile.
So a bit of a shift in where the demand is coming from.
Precisely. And they're not just sitting back and watching this happen. They're taking steps to manage the situation.
What kind of steps?
They're proactively adjusting their production levels to respond to the evolving demand and ongoing inventory adjustments.
Makes sense. Better to control the supply than let the market dictate terms, especially in a volatile environment like this.
Absolutely. They're focusing on optimizing their utilization and total capacity, particularly for what they call their premium nodes.
Premium nodes. Now that sounds interesting. What are those exactly?
Premium nodes refer to their most advanced and efficient manufacturing processes.
Okay.
By prioritizing these nodes, they aim to accelerate the stabilization of profitability in this dynamic market.
So focus on efficiency and higher value products. That makes sense, especially when facing pricing pressure.
Exactly. They're also looking further out than just the next quarter. Despite the current challenges, they're optimistic about the long-term prospects of the flash business.
That's good to hear, especially considering they're about to spin it off as a separate company. What's giving them this confidence in the long-term outlook for flash?
Well, for one, they see signs that the current inventory digestion will continue into the first half of calendar year 2025, but then normalize in the second half.
So a bit of a rough patch, followed by smoother sailing, hopefully.
That's their expectation. And they believe this normalization will set the stage for a recovery fueled by a couple of key trends.
What trends are they watching?
They're betting on an AI-driven PC ramp and the Windows refresh cycle.
So they're anticipating a resurgence in PC demand driven by AI and the need for newer, more powerful machines.
Exactly. And in the data center market, they project that cloud capital expenditures will continue to grow in calendar year 2025.
Cloud capital expenditures. That's a mouthful. Can you break that down for me? What does that mean for the flash business?
Think of it as the money that hyperscale companies like Google, Amazon, and Microsoft are pouring into building and expanding their data centers. This spending spree is good news for flash memory because those data centers need tons of it.
So as long as those cloud giants keep spending, flash has a reason to smile.
Precisely. And Western Digital is actively working to secure its share of this lucrative market by qualifying its cloud products with these key customers.
So they're not just sitting back and waiting for the market to turn around. They're taking proactive steps to ensure their success.
Exactly. Now, beyond the cloud and data centers, they're also seeing some positive signs in their consumer flash business.
Oh, that's right. We didn't talk much about their consumer segment earlier. How is that shaping up?
It's actually performing quite well. While they expect some seasonal weakness in bit shipments, their premium brands are providing average selling price support to the overall portfolio.
Premium brands. So they're not just competing on price alone, they're also offering products that stand out from the crowd.
Exactly. And they believe this strategy, along with efforts to bolster consumer preference and expand partnerships, will drive organic demand and margin expansion in the long run.
Smart move. Got to diversify your revenue streams and cater to different segments of the market. Okay, so that's a pretty comprehensive look at the flash side of Western Digital's business. It's facing some near-term challenges, but there are also reasons for optimism about the long-term outlook, especially with their focus on the cloud and AI. Now let's switch gears and talk about the other half of their empire, the HDD business. This is the segment that's staying put under the Western Digital name after the split.
Right. And as we discussed earlier, it's been the star of the show. This quarter data centers are gobbling up those HDDs like they're going out of style.
It's a true HDD renaissance. They reported record demand that's actually exceeding supply. That led to a 12-quarter high in revenue and a record non-GAAP gross margin. What's driving this phenomenal performance?
As we discussed, it's that insatiable demand from data centers fueled by the explosion of data creation and storage needs. Everything from video streaming to scientific research to AI is generating massive amounts of data that need to be stored somewhere.
And it sounds like HDDs are still the go-to solution for storing those massive amounts of data cost-effectively.
Exactly. While flash is great for speed, HDDs offer a much more affordable solution when you need to store vast quantities of data, and Western Digital is well positioned to capitalize on this trend with its innovative ultra-SMR technology.
Right. Their ultra-SMR technology allows them to increase storage capacity while maintaining reliability. It's like squeezing more data onto those spinning disks without sacrificing performance.
That's a great analogy. Now, even though they're experiencing record demand, they're not just sitting back and enjoying the ride.
Right.
They're facing some supply constraints.
Yeah.
So they're working closely with their customers to get better visibility into their future needs and ensure smooth product deliveries.
So they're not just chasing short-term gains, they're building long-term relationships and a sustainable business.
Precisely. And as they continue to broaden the adoption of their ultra-SMR portfolio and ramp up their newest drives, they anticipate profitability will continue to improve in the coming quarters.
More good news for investors. Now, you mentioned those supply constraints. They're clearly operating in a tight supply environment right now, but can they keep up with this growth in the long term?
That's a key question. They acknowledge that the current tight supply can lead to some volatility in shipments from quarter to quarter.
So some bumps in the road are to be expected.
Yes. However, they believe that over the longer term, they can achieve more predictable business operations and sustainable, profitable growth.
So steady as she goes, with an eye on the long game.
Exactly. Their focus on operational excellence, maintaining an efficient cost structure, and balancing supply and demand should serve them well in the years to come.
It's like they're building a fortress of profitability brick by brick. Now, remember those investor days we keep mentioning. Those events happening in February are where we'll really get a much deeper dive into the strategic roadmaps for both the flash and HDD business.
February 11th for SanDisk and February 12th for Western Digital. Those will be must-watch events for anyone interested in the future of data storage.
Absolutely. Mark your calendars, folks. But before we wrap up this part of our deep dive, any final thoughts on the contrasting fortunes of these two soon-to-be separate businesses?
It really is fascinating to see how two businesses operating under the same corporate umbrella can experience such different realities. Flash, the darling of the tech world, is facing a reality check as supply catches up with demand.
Right.
While HDDs, often dismissed as relics of the past, are enjoying a resurgence fueled by the data explosion.
It's a classic case of what's old is new again. Who would have thought that spinning disks would be making such a comeback in the age of cloud computing and AI?
It's a testament to the enduring power of innovation and adaptability, Western Digital. By embracing both technologies and tailoring their strategies to each market's unique dynamics, has positioned itself to thrive in this ever-evolving landscape of data storage.
Well said. They're not putting all their eggs in one basket. They're hedging their bets and playing to each technology's strengths. Now, that's what I call a winning formula. Now, stick with us for the final part of our deep dive, where we'll unpack those Investor Day presentations and see what the future holds for both SanDisk and Western Digital. Welcome back to Talk Tickers. We're wrapping up our deep dive into Western Digital's Q2 2025 earnings call.
It's the home stretch.
We've crunched the numbers, we've dissected the business segments,
Right.
And now it's time for the grand finale, looking ahead to what the future holds for Western Digital.
Right.
Especially with their upcoming split.
Yeah, it's going to be fascinating to watch these two companies.
I think so.
SanDisk, focusing on flash, and Western Digital on HDDs, forge their own paths. It's like watching a corporate mitosis in action. But instead of identical twins, we get two distinct powerhouses, each with their own strengths and strategies.
I love that analogy.
Yeah.
So let's start with SanDisk. Their Investor Day presentation was all about flash memory.
Of course.
No surprise there. But how do they plan to navigate the current turbulence in the flash market? What's their game plan for success as a standalone company?
Well, their message was clear flash memory is the future. And they're all in. They're doubling down on their strengths, which include their premium product portfolio, their close relationships with key customers, and their focus on emerging opportunities, particularly in the cloud and AI.
So it sounds like they're acknowledging the near-term challenges, but are confident in their ability to ride out the storm and position themselves for long-term growth.
Exactly. They emphasize their commitment to innovation, particularly in areas like enterprise solid-state drives or SSDs.
Enterprise SSDs.
Which they see as a key growth driver moving forward.
Okay, remind us what those are and why they're so important for SanDisk's future.
Well, enterprise SSDs are essentially high-performance, high-capacity storage devices designed specifically for the demanding needs of data centers and enterprise applications.
Okay.
Think faster data access, higher reliability, and the ability to handle massive workloads. They're like the Ferraris of the storage world.
Got it. So speed and performance are the name of the game for enterprise SSDs.
Right.
And SanDisk is betting big on these high-performance drives to fuel their future growth.
Precisely. They believe that enterprise SSDs are well-positioned to benefit from the continued growth of cloud computing and the increasing demands of data-intensive applications like AI.
Okay, so SanDisk is all about speed performance.
Right.
And riding the wave of data-intensive technologies.
Yeah.
Now let's turn our attention to Western Digital. What's their vision for the future? How do they plan to compete in this rapidly evolving data storage landscape?
Well, their message was equally clear. HDDs are far from dead. And they're the kings of cost-effective, high-capacity storage.
Okay.
They believe that even with all the hype around flash memory, HDDs still have a vital role to play, especially when it comes to storing those massive amounts of data being generated every day.
Long live the spinning disk.
Right.
But with technology evolving so rapidly, how do they plan to stay ahead of the curve? What innovations are they pursuing to ensure the continued relevance of HDDs?
Well, they're relentlessly driving innovation in areas like areal density and energy efficiency.
Okay.
Remember their ultra-SMR technology that we talked about earlier?
I do.
That's just the beginning. They're constantly working to squeeze more and more data onto those platters while making them even more power efficient.
So it's about pushing the boundaries of what's possible with HDD technology.
It is.
What else is on their innovation roadmap?
Well, they're actively developing next-generation technologies like ABO-R, which stands for Heat-Assisted Magnetic Recording.
HAMR. Now that sounds like a supercharged HDD.
It is.
What does this technology mean for the future of HDDs?
Well, MRR has the potential to significantly increase the amount of data that can be stored on a single hard drive.
Okay.
It basically uses heat to make the magnetic material on the disk more receptive to recording data, allowing for much higher storage densities.
So it's like they're cranking up the heat to pack even more data onto those disks.
Exactly.
That's pretty impressive. It sounds like Western Digital is not just resting on their laurels. They're actively preparing for the future of data storage.
They are. They're laser-focused on capitalizing on the ongoing data explosion, particularly in the cloud and AI.
Right.
They believe that even with the growth of flash memory, HDDs will continue to be an essential part of the data storage ecosystem, providing a cost-effective way to store those vast amounts of data.
That makes sense. Even with all the fancy new technologies, you still need a reliable and affordable way to store all that data.
Right.
And it sounds like Western Digital is positioning itself to be the go-to provider for that need.
Precisely. They're betting on the idea that both flash memory and HDDs will have their place in the future of data storage.
Okay. So both SanDisk and Western Digital seem to have a solid plan for the future. They're each focusing on their core strengths, driving innovation, and positioning themselves to capitalize on the growing demand for data storage. But here's the million-dollar question. Are they both set up for success as standalone entities?
That's the billion-dollar question.
Right.
And ultimately, only time will tell. But based on what we've seen and heard from their Investor Day presentations, both SanDisk and Western Digital have the potential to thrive in their respective markets.
Okay.
They each have a clear vision, a strong track record, and a commitment to innovation.
And let's not forget that massive tailwind they both enjoy.
You're right.
The insatiable demand for data storage.
It's a data-hungry world out there.
It is.
And these two companies are perfectly positioned to feed that hunger.
Speaking of hunger, remember that crazy trade idea we cooked up earlier?
I do.
Shorting SanDisk and going long on Western Digital?
Right.
The one that was definitely not financial advice.
Yes, but after hearing both companies lay out their visions for the future, it seems like a much riskier bet than we initially thought.
I agree. Both SanDisk and Western Digital are showcasing their strengths and making a compelling case for their future success. It's no longer a clear-cut case of one company being undervalued and the other overvalued.
Right.
Both seem to have a bright future ahead.
Exactly.
Yeah.
So maybe not the best trade idea after all, but it was fun to speculate.
It was.
As we wrap up this deep dive, what are some key takeaways for our listeners?
I think the biggest takeaway is that the data storage industry is constantly evolving. New technologies are emerging. Old technologies are reinventing themselves.
Right.
And the demand for data storage is only going to continue to grow Western Digital by strategically embracing both flash memory and HDDs has positioned itself to ride the waves of change and capitalize on this ever-growing demand.
Well said. They're not just surviving, they're thriving in a dynamic and challenging market.
Right.
And with this upcoming split, we're about to witness the birth of two new powerhouses, each ready to make their mark on the world of data.
It's an exciting time to be following the data storage industry, and we can't wait to see what the future holds for both SanDisk and Western Digital Vert. All right, data heads, that wraps up our deep dive into Western Digital's Q2 2025 earnings call. We hope you found it insightful and maybe even a little bit inspiring.
Remember, knowledge is power.
Especially in the fast-paced world of technology and investing.
It is.
So still curious, keep learning, and as always, happy investing.